Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, to start the show, I want to talk about something that I've been doing with institutional money managers for the past 32 years in terms of helping them understand the relationship when a stock is trending, whether it's an uptrend or a downtrend, and knowing what is the proper location to be thinking to be a buyer and what's the proper location to think to be a seller. So let's go ahead and get into this agenda for today. So it's a lot of it has to do with using a higher time frame trend and knowing where you are in relation to that trend to know what you should be thinking. So we want to determine what the trend is. Number one, is it an uptrend, is it a downtrend, or is there no trend at all? Is it sideways? And then we want to look at price and its relationship to the 18 MA. You can use a 20 if you want. And then what we want to do when we look at that relationship is start to look at the momentum on the smaller time frames to help determine, once we hit a key location, what to do or when to do it. And then when we're done with that, we're going to go through the individual stocks that came through. So let's go ahead and get into this lesson now. I've got Microsoft up with a monthly on the left and a weekly on the right. And I've circled some spots here because I want to point out where I think you can use this moving average complex. The 18 and the 40 is what I use. You can use a 20 and a 40, no problem. And also look at the supporting evidence of the momentum. And I think what you're looking to do with this is trying to identify where the key levels, where the buy points are, where you should be thinking to be a buyer and where you should be thinking to be a seller. Now, that doesn't mean you're going to catch those spots, but you're looking at location as being, okay, if I get a pullback into a rising trend, so I've got a trend to the upside, the 18 is above the 40 and both lines are rising. And if that's the case, I want to look for pullbacks at or near the 18 MA. Now, sometimes it'll be below and sometimes it'll be slightly above, but in the area, and I've kind of circled what I would consider to be the areas. The other side of the coin is after a move to the upside, we want to look for signs of exhaustion or reversal or momentum loss on the smaller time frame to help us determine when we should be looking to reduce that position or exit that position for a trader. And even though this is a monthly chart, what it's doing is giving you locations of where to expect the bigger time frames to make changes. So if I'm looking at this monthly chart, I could go back. In fact, let's just look at this and recognize that every single time, once this turned up in 2013, 2014, every time we pulled back to these rising moving averages, it was a pretty good opportunity from a longer term standpoint to look to be a buyer. Now, if you notice from 2020 all the way to the peak, we didn't come back and test. And that's usually a sign that we're getting into kind of like a surging market phase when we don't keep coming back on a regular basis. And it starts to accelerate a little bit. So this is actually a pretty good exit point, I think, based on what the signals were giving. But if you notice, it didn't cause a full-fledged pullback to the 18. Momentum kept on confirming, and then it goes to another new high. Now, if you wonder why I picked out some of these spots, just to give you a couple examples, look at the reversal bar that takes place. So we have a move away from the moving average. And look at all these green bars, green, green, green. And then we get a nice green bar to the upside. We get some strength, and then we come back down through this close of this bar and we come back down and turn the bar red. That's a pretty big negative, in my opinion, after a nice move to the upside, and it suggests we probably go through a pullback. Another example would be we're moving up and pretty orderly, and then all of a sudden you get this monster move to the upside, biggest bar in this whole run, and that's sort of a sign of exhaustion, and we get confirmation on the next bar. Good spot to maybe look to be cutting back or taking profits, or at least not thinking I should be a buyer. I want you to be thinking that I want to be a buyer closer to these lines and a seller farther away. We have pullback risk when we get away from the lines, and when we get closer to the lines in any time frame, that's where we can get to be look to be a buyer. If we look at the weekly chart, it's basically the same thing. Notice the parallel nature of these moving averages as they were moving up. The 18 and the 40 moving up at about the same rate. Every time we get back closer to this line, it's actually an opportunity to maybe go down to the smaller time frame daily and look for an entry, because we've got a trend on this time frame and we're coming back to trend support. When we get stretched away after 3 to 5 bars to the upside, shows some signs that we're tiring out. Go to the smaller time frame and look for an exit point if you're looking to be a trader or reduce a position that has maybe been pretty profitable. I mean, like a big run to the upside and then we get somewhat of an exhaustion bar and a couple pause bars. It's telling us we're probably getting a little tired and need to pull back a little bit. So, you know, these are the types of things that I think it sounds really simple. And we want to use momentum indicators to confirm what we're seeing here, but just think about it in these terms. When we get stretched away from the moving average, we don't want to think to be a buyer, we want to think to be a seller. And when we get closer to the moving averages, when they're trending, we want to look to be a buyer. So look for location, just like in real estate, you know, location is everything. And I think in a lot of cases with the market, if you're thinking to be a buyer at the right spots, it's going to help you tremendously. Now, if you notice what's happened to Microsoft here recently, notice how the monthly chart is no longer respecting the 18-month, and that line is flattened out. Now, it's flat, it's not declining. So when I see a flat line, I'm thinking maybe there's no respect and we could trade around that. Now, if this line turns down and we fail at it, now we've got the same thing that was taking place to the upside. We have to sort of respect to the downside until that changes. So we want to be on the lookout for that. Kind of like what happened on the weekly where this turned down and we failed at it. Now we have to sort of respect these two lines declining. Now, it overran somewhat, but both of these lines stayed declining throughout. So as long as that remains the case, you're actually looking to be a seller on rallies and a buyer or covering short positions if you're a trader as it gets stretched away and we get signs of reversal. So there's an undercut that had no follow through. We're looking to be more aggressive to take profits on the trading side, especially when you're shorting. So hopefully this helps you in terms of thinking. Each time frame has its own trend and its own relationship to the 18. So keep this in mind. If we have this parallel nature in place in the moving averages, you can take advantage of that by knowing when to be a buyer and when to be a seller. All right, let's move on to the stocks now. Just briefly, my services can be found at rabilstockresearch.com. The individual package has about 2 to 3 reports each week. And a special video for that package as well. Now, for now, I'm still providing a discount using a coupon code StockTalk, $50 for the first 2 months, but that is going to change. I'm adding a online course to the research that should give a lot of information as to how to use my approach and everything. And so I'm going to change the pricing on that. So anyway, if you want to take a look, go ahead and check it out at rabilstockresearch.com. Let's go ahead and get into the stocks now. I'm going to start with the S&P 500 index and then go into a couple big names before I get into the requests that came through. So when I look at this S&P, I mean, let's reference what we were just talking about in the lesson. And one of the things that was kind of a veiled comment, I mean, I don't make it blatant, but if we have a 18, which is above a 40, and both lines are rising, basically that trend is positive in that time frame. Okay, that means that the price action would have a very difficult time. I studied this for a long time. It would be very difficult for price to not be in an uptrend when you have this situation going on in the moving average complex. So by default, it can give us what the price structure, or at least a definition of where we stand right now. So if we look at this on a monthly chart, we had a rising 18 that is now flat and starting to turn down. We still have a rising 40. So the question I have for you is, are both lines rising? Are both lines falling? Are we below both that are falling? Or are we above both that are declining? The answer is no on this time frame. We don't have an uptrend and we don't have a downtrend right now on the monthly chart. We have a neutral pattern. That's what I would call it, neutral. We're getting a little oversold in this neutral pattern because we're getting stretched away from the moving average. The MACD line is working its way back down closer to what I would consider to be support. Hasn't quite reached it yet, but it has undercut the prior bottom in MACD. So, it raises a little bit of an alert, especially because we've gotten stretched away. Now, if we go and look at the weekly, this is a little bit more definitive. Let's zero in on this. We've got 18 below the 40, prices below both. Both are trending lower. Now, even though this has started to flatten out in the last bar or two, just really, if you look at it just generally speaking, without looking at it with a magnifying glass, the trend is down. I mean, we've got an 18 below the 40. They're both moving down at about the same rate. But let's look at what's going on when we look at the momentum. So we are getting a little stretched away. So you know how I draw these circles as we get away from the line? We do that to the upside, right? But we also want to do that to the downside, and also notice how we kind of undercut this most recent low and didn't follow through. So with that, with the improving momentum condition, MACD did not hit a new low. We've got some conflicting data with the momentum because this is still pretty strong. Even though this is not making a higher high based on the sellers, it stayed above 25 during this rally. So we know that there's still the sellers are still in command here, but based on MACD, it's suggesting we could get a little bit of a bounce. So we're at somewhat of a critical level here. And the reason why it's critical is that right now we had an 18 below the 40 and both lines declining. And look at what's going on right now. You see how the 18 is starting to flatten out? So I don't really have this situation where both lines are declining anymore. It's turned into a neutral pattern. Now it's just barely neutral, because if this comes back down and breaks the 18 and this starts to turn back down, now we're in the same boat again where this trend is down. It's not really confirmed yet because this line hasn't started rising, and we haven't proven that we can hold this 18 line. But also notice that the MACD is making a higher bottom versus price in this time frame. So we have two time frames in MACD showing momentum divergence. Again, that suggests even though the ADX is really strong on the sell side, it's just suggesting that there's the potential for a rally and maybe make a move back up towards the inside or in the area of the 18 on the weekly, which is right around that 3,900, maybe 3,950, possibly 4,000 if it's strong. And if it's really strong and we see new momentum show up on the daily chart, then it could bust through that 18 and start to flatten it out. So this is how you go through time frame by time frame, looking at price, trend, and momentum. All right, let's go on to Microsoft. I figured I'd just follow up and give you a quick glimpse. So just based on what we were talking about, we were getting stretched away on the weekly chart. You see how this has gotten a little too far away from the 18-week? The trend is down for sure. And on this one, we haven't turned the 18-day, but it's starting to flatten a little bit. If we get a little bit more of a push and we get back up through. Now, don't forget to draw your trend lines in. We had a trend line that was broken because it went to a new low. So now we draw a new trend line, which was violated. And so we're getting a little mini test. If we can turn back up, then we'd kind of have the makings of a little 1, 2, 3, and this 18 will start to confirm that if it's turning up, and that again would give us an indication that we're probably ready to work our way back up towards the 18-week and possibly a little bit higher, just based on the fact that the momentum looks like it's slowing a little bit. So this is the process you go through. You look at the slope of these moving averages. You look at the momentum in both cases, both ADX and MACD, and in this case, we're getting a differing of opinion based on these two indicators, both time frames, weekly and on the daily chart. So that means it's a little bit tougher. The environment's a little bit more difficult. If you want something that looks a little bit more attractive, you've got to find moving averages that are rising, not falling. Now, if you want to play the short side, yeah, I guess you could play that. The problem with that is that the momentum is starting to show signs of slowing. And so even that side is a little bit more difficult right now. So you got to be watching what's taking place in the short term to see if it can turn into something a little bit more meaningful. But right now we're kind of looking at it like a trading move. And the best case scenario is that we could work our way back up and test the 18 on the monthly, which is flat. Remember, we tested and failed at this line here, but it was still basically rising at that point. Until we fail at a declining line, we don't really have any trend on this time frame, confirmed in one way or another. So just kind of be careful from that standpoint, because we are sitting at the 40, and that would lead me to believe that, we could get a little bit of a rally here just based on everything I'm seeing. Now, Tesla's a little bit different because it was later to roll over, but the most recent action is very, very bearish. And one of the things I posted for subscribers a few weeks ago was I really did not like this failure at the zero line. I thought that was a really big negative. The fact that this turned down from zero for the first time in a very, very long time. If you notice, this was holding the zero line in MACD, and now we just failed at it. This is a key level that we're watching, and right now we're below it. So maybe it could be pivotal, but let's just go back to what we were talking about. We have a flat moving average here. We don't have a rising one. This is a neutral monthly chart, and we basically have a neutral weekly because the 18 is flat on this time frame, right? We clearly have a bearish trend on the daily with strong momentum characteristics. So it would be tough to want to just jump in based on what I'm seeing on the short-term trend. But we're in an area on the weekly where maybe we're getting a little oversold. We just don't have any confirmation to do anything on the long side here. So just continue to stay defensive and not be looking to be aggressive as a buyer in this stock. Now, let's look at something a little bit different. I mean, look at the pattern here. This is pretty attractive. This came back to support. Yeah, it overran a little bit, but it found support at two rising moving averages. Now, they're not separated by that much, but they both are rising, and the 18 is above the 40 on the monthly. Notice how the MACD held its signal line on this pullback. Now, MACD reached the zero line here, and it also made a lower low. You see how that continued to make lower low while this made a higher bottom? So we have this reverse divergence pattern, and we have the makings of some kind of a reversal developing because we're breaking the downtrend line on a big green bar. Big green bar. It's not a small thing. So because the moving averages are down, we have to look at it in relation to the higher time frame. Is this really a bearish trend, or is it just a opposing trend to the higher time frame, which I think it is. In other words, if this trend is up and this trend is down, we have to look at the momentum and say, is it strong selling? Because if it isn't, it's probably setting up for a new buy signal to the upside, which I believe is what's taking place here. So we have strong momentum, we have good momentum and a positive trend on this time frame, and we have an opposing trend, or what I call a potential failure to follow through to the downside, and that is a bullish sign on this time frame. If we go and look at what's going on the daily chart, notice how green DI, in fact, I want to zero in on this. Notice how green DI is starting to break out for the first time in a while. It went down into a slumber here back in August, hasn't really done anything, and now we're finally breaking out above all these highs. And look at the volume action. So those are encouraging signs. What I've been telling my subscribers, I don't really like to buy breakout patterns in a bear market. I'm not a huge fan of that, especially if it's up big off the moving average. You see how this was stretched away from the moving average? So what we want to do is look for a higher low to form. That means this is going to have to pull back a little bit and then turn to the upside. And if we get that and we get some kind of a higher bottom, then I think I have a little bit more confirmation that if you think about this is the one that's formed. We've taken out the trend line. Let's look for the 2 to develop. And then if we can form a 2 bottom, then I could get a little bit more interested here. Definitely a stock. I have GD as well as Lockheed Martin as stocks on my watch list. Because of what's taking place here, we have to respect the price action that's taking place and the new signs of buyers on the daily chart. So if we look at Dick's Sporting Goods, one of the things that I haven't drawn any attention to recently, but look at this chart over here. You see this relative strength line? So we're seeing a market that went up and has made a new low here. You see how this is making a low, the S&P is making a lower low. And you see how this is being really resilient during this most recent decline. It pushed up stronger while the market was going up. And then when the market turned down and went to a new low, this has just been holding its ground above this key 100 number. Okay, it's a big number. Big round numbers are really important in the stock market. And we look at this and we see that the relative strength is telling us that this is holding up pretty well. So I know that's happening on the weekly chart. I know that we're holding the moving averages, and notice what's going on. We now have an 18 that's above the 40. Now the 40 is flat, but the 18 is clearly rising, and the MACD is holding up above the zero line. So I would say some kind of encouraging signs. I think if we can show some signs of strength coming up through this most recent resistance area around 115, I would be pretty encouraged because we have a zero line reversal and low ADX. So something to watch for. I mean, we had a gap up this morning that gave back. So there's still clearly resistance up there at 115. We need that to be exceeded before we have any interest here. Okay, let's look at Nike. So, let's just define what's going on. Now, the 18 is declining and the 40 is still rising. So we don't really have a trend on this time frame. I would consider it neutral and oversold. You're coming into some support, but the momentum conditions are not good here. This is very weak, and this is really disturbing. So when we go and we look at stocks like Microsoft, Tesla, Nike, Netflix, NVIDIA, what I want you to do is draw a trend line on the relative strength. Okay, these stocks are market stocks. As long as the trend on the weekly chart, if the relative strength is making lower highs and lower lows on a weekly chart, you want to continue to avoid this stock. Don't try and pick bottoms in a stock that is underperforming the market. This is no longer a market leader, and until it breaks that trend line, it really doesn't have an opportunity to be a market leader. So I can save you a lot of anguish trying to pick bottoms in these stocks by using the relative strength. And I'm talking about the market stocks, all the stocks that are in the top 50 to top 100 in the market in terms of market cap. They're one of the bigger names. These are in the top 30, okay? Microsoft, Tesla, Nike, Netflix, NVIDIA. Do that on every one of these, and I think it's going to help you, and it'll save a lot of anguish. So interesting request here. I know this is more on the aggressive side. It's a two times bulls. I think what the person who requested this said he knows this is more for trading. And I like what he's thinking because the action here is pretty good. If we look at the weekly chart, we've got this slightly lower low right at the zero line, little bit of a reverse divergence right at the zero line. The sellers aren't really showing any strength because red DI cannot exceed 25 and it can't exceed the green DI, which is the plus DI. So that tells me the bias is still to the upside on oil and or this GUSH. Now we're getting this sort of opposing trend where the 18 is starting to turn up, and I don't mind coming in a little early, even though we don't have a rising 18 above a rising 40. Because we have indications on the higher time frame, there's improvement. I don't mind getting in as the 18 is cupping around or even on a trend line break in some cases. So definitely an interesting pattern for a trade, but we do know we have resistance up here. And for this instrument, I would try and trade this with the risk reward where I play it to that peak. CCRN, another request here that's breaking out. Look at the relative strength. I mean, this stock was really resilient through this whole correction period. We never saw any real weakness relative to the market. It was giving indications back here that it wanted to break out based on that. Look at the momentum conditions in place. Really, really good. The problem we've got right now is we're a little stretched away from the moving average. This is more of a spot to maybe look to be a seller if I'm a trader, or cutting it back if I'm an investor that got in at the right spot. Maybe you're looking to trim it a little bit and then look for a better opportunity to either add or buy again closer to the moving average, but really, really strong pattern, no question about it. Netflix short-term pattern is really good. Look at this low ADX breakout, zero line reversal. We had a horizontal channel going across. So in that case, I'm drawing a horizontal trend line. Now, it ended up breaking it through on a gap. So it would have been a tough entry. But now, because these moving averages are starting to turn up, I'd probably be looking for a little bit of a pullback play to rally up towards the next big round number, which is 300. Now, keep in mind, this is a counter trend play to the monthly. The monthly is actually bearish with the strong, both lines are declining, and now the 18 is below the 40. So I can define this as negative now, but very oversold and probably due for a rally. So you're playing this counter trend, and that's how you have to go about doing that. Exxon, again, energy is in an uptrend. The only sector that I have that's still in an uptrend on the daily and the weekly, the monthly charts are still in an uptrend as well. Horizontal consolidation pattern. We have reverse divergence here. So reverse divergence is when price makes a higher bottom and MACD makes a lower bottom. Normally, standard divergence is the opposite. In this case, we have no sign of sellers, and we have this reverse divergence pattern holding right at the 40-week moving average, and then we come up and we make our higher low that I like to look for, and we're getting some follow through off of that. Very good looking pattern. Just be careful in energy not to overload. I get a lot of questions about energy, and I don't like to put all my eggs in one basket, so just be careful there. Really quick on NVIDIA, use the relative strength trend line. Don't be picking bottoms in this right now unless you're really a short-term trader. Thanks for watching. My research can be found at rabilstockresearch.com. If you have any stock requests, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.